Everybody, welcome to another edition of Your Money Radio. Let's see here. Danny Stewart, Don Vandenbord, Hunter Mozingo is with us, and not Zachary Quinto, our illustrious executive producer, is right here. Zachary Quinto is in Star Trek, right? Look at Danny mouth breathing.
He is in Star Trek.
He is in Star Trek. He's new Star Trek, Daniel.
And what's his name?
Zachary Quinto.
Zachary Quinto.
Yeah, Zachary Quinto. I only know that because I haven't seen the new Star Trek
That's
movies.
the character name?
Well, no, Zachary Quinto is the actor that plays. Is he Spock?
He is Spock?
He's Spock.
Yeah.
Yeah, he's Spock. And I only know that because I watched Big Bang Theory. But more important things. So, Zach, the show, Zach and I are talking before the show, before Danny comes into the studio. And here's the thing, Stock Nerds Market Lovers. I'm going to give you a bunch of stuff right on top of the show, like how you could have traded AMC without sweating it. Talk about how you know maybe the next move in the market based on one chart. Stuff like that. But more importantly, I was talking to Zach about how I'm going to play defense against Danny's offense today. Danny has come into the studio with a printed out sheet of information, and I don't think it's highlighted. I think you highlighted it on the computer and printed out the highlights, or did you highlight it personally?
I highlighted on the computer and put it down.
That's
just a one-page.
That's even more.
It's
That's even more. That means it's even more serious than what I thought. When Danny doesn't take the time to highlight it professionally on the computer. Then,
no, I did do it on the computer.
That's what I mean. Oh, when you don't do that, then it's like I don't have to. I don't have to have the maximum of like 12 players on the field. You know what I mean? Like you're only allowed 11.
Right.
I need 12 players on the field to play defense against whatever offense you're about to throw with me. But that's okay. My first line of defense is this: I'm going to make you dumber. Danny, you're old, right? And so here's the thing.
I'm experienced.
Wait, no. I was reading in the paper here this morning. Danny, you're old, and I thought, gosh, this is probably right up Danny's alley. The gentleman, Dr. Arthur Spots, right? Are you familiar with Dr. Spots' work?
Spots.
No.
Spots.
See, when we do stuff like that, literally, like the train that's rambling down my head, it's just
went off the rails.
Oh my God!
Went off the rails.
It's
going over the bridge like the old westerns into the ravine.
That's exactly what's happening. That's exactly what I pictured too. Like Johnny Cash started playing in my head. I hear the train coming, and it just went right off. Spots. So Dr. Spots,
That's
died.
A great song, by the way. I hear the train coming round the bend.
Yeah. So anyway,
Zach would have done a quick drop.
I need to get quicker on
We'll get quicker.
I got some ideas.
So Dr. Spots invented the timeout for children. Passed away.
Oh, yes.
His
name is not Dr. Spots.
Dr. Spots was his name?
It's spelled Staats, but in the paper here it says rhymes with spot. Oh, it's not. Oh, it's Stotts. Stotts, not Spot. I read wrong. I read the newspaper wrong. Dr. Stotts.
Dr. Stotts.
Did that change everything for you? That you
I know who he is. Now I know who he is.
You got to get that coagulated correctly.
That's the show before the show.
This is the best. Danny, I mispronounced the name. Danny's like, oh yeah, Stotts. I know Stotts. So anyway, he invented the timeout, and I figured you're old. I was going to ask you what they did before the timeout, and so the whole theory.
They just beat you.
Yeah, you get a switch. Yeah.
Beat you with a switch. And the whole theory is, and it sounds, like the biggest evolutionary or revolutionary steps when you look back are only in hindsight. Evolution is
evolution.
It doesn't seem that big of a deal. Like when you say, well, the kids need a warning before they get punished. Like that will oftentimes, that's what his work was based on. That if you give the child a warning beforehand, just don't go right into the punishment. That doesn't sound like a big deal in 2021, but when he created this whole thing back in the 1950s,
it was a novel idea.
Very novel idea. Because
before
before it was just a hit with the switch. Now you've got this.
He came out with the idea that you lay out the ground rules and not treat them like an adult, but you kind of give them what the rules are, and then give them a warning if they don't, then you go to the box.
That's right.
And little did I know here, he taught his daughter at the age of 3 how to read. That's pretty impressive into itself. I mean, I only learned how to read when I was 4.
Man was a visionary.
Because he would beat her if she made a mistake.
That's right. That's it. There's why we don't go to Don during.
He gives her a warning first. If you don't read, you're going to go to timeout.
Oh, okay. All right.
If you don't go to read, you're going to go to timeout.
So Danny's got hot. So, in all seriousness, Danny's got a hot topic that he wants to discuss, and we'll get to that. There's a lot of loose things that we've left on the show floor the last couple of weeks. So, and we're not going to touch Tether, and stablecoins, and a topic that we've broached the last 3 weeks. I think we're going to say that we're going to table it for next week because there's something a little bit more pressing that Danny wants to get to. But before we do that, I want to make the show very practical for stock nerds and market lovers. And how we do that is give you something that you can use right off the top of the show. And then we'll get into something a little bit more topical that may be affecting you towards the end of the year. So, Daniel, AMC. So, AMC's in the news. And what I don't like to do is, like, by the way, if you turn on any media right now,
ticker AMC.
Easy.
That's
Sorry.
what you're. That's
Go
what
ahead,
you're
go
going
ahead.
to control.
You know, yeah.
See, it's like I need a 13th player. Like I don't need all 11 on the field. I need 12 and 13 to come off the bench.
Right.
There was a game. I don't remember. Don, do you remember this? Where was it an Eagles team that a player came off the bench for Buddy Ryan and tripped someone running down the field?
It might have been the coach.
Was it a coach that did that?
Coach trip?
There. If someone can Google that player or coach who came off the bench to trip a player,
Guy was running down for a
score
touchdown. Yes.
Wow. I need that guy right now.
See, I think you just give him the score and a penalty.
That's right. Just give them both.
I don't know what they did for that. I think the person got suspended.
Yeah, but they didn't get the score.
Oh, they did?
No, I don't think so. I
Really?
think it was where the ball plus like 15 yards.
That's it?
Oh, that's
Yeah.
dirty.
It
That's not.
They should have gotten a
not-
score, plus they should have gotten the ball back.
That's
if you get
not
the breakaway on the touchdown, that's game over. Come on.
That's
That's the touchdown.
That's not right. So look, I got these average true range charts up on my screen. I use these all the time in the videos that I produce. And the average true range, real quick, and I got a lot of questions on this. Something I did in the last video on Wednesday must have sparked some new viewership. And so let me just cover this real quickly. So the average true range is based on the mean. So the mean is based on the 21 exponential moving average. And every stock, every commodity, every indice has a mean to it, or a 21 exponential moving average. And over the last 21 days, you can see AMC has traversed $9.28. The range is expanded. And so what you get 1, 2, and 3 ATRs above the mean, and then you can get 1, 2, and 3 ATRs below the mean. And so what the ATR charts do for me, and they can do it for you as well, is show you when something is visually extended. So oftentimes in the media, Daniel knows, they'll say, well, that stock's extended, it's overvalued. And those are pretty worthless words and phrases, like
Without context.
without any context. And to say something is overvalued, which it goes hand in hand with an AMC or a GME or any of the meme stocks, a BlackBerry, does it help you at all? And it doesn't, because you could say, well, it helps me to stay away from it so I don't get caught. And so, well, why would you get caught? Because that's a phrase that I hear a lot. Well, if you just avoid it, you won't get caught. But if you actually participate in it, you can make a tremendous amount of money. And what I'm about to show folks works for any stock, any commodity, any ETF, any indice. And so if you just understand where the mean is. And so let's get, Don, give me, Don, you like NVIDIA, right?
Love NVIDIA.
Love NVIDIA. So we'll just use NVIDIA here real quick, and then we'll go back to AMC. And so now this is theater of the mind for Danny. If you wonder why Danny's just looking at me on screen right now, it's because Danny is now gone computerless when we do the show. And so he's got to visualize the charts in his head. And so when
Not a problem.
if Danny looks like he's thinking on
Sees him
high,
in his sleep.
right, like he's a yogi on top of the mountain,
Got my legs crossed.
yes, getting his
That's right.
on.
More
Then-
like, hey, boo boo.
that would be Danny's own. Yes, that would.
Wow, Don.
That would be Danny's yogi 100%. And so,
Picnic basket.
and so to illustrate this point with, say, a stock like NVIDIA, I believe NVIDIA is NVIDIA going to split 4-for-1 in June, or is it a month from now after earnings? Is NVIDIA going to split?
I'll get the date.
Thanks. And so, anyway, here is the mean. Here is 1, 2, and 3 ATRs to the upside, and 1, 2, and 3 ATRs to the downside. And so I look at NVIDIA right here and say, well, would I want to start a position? Why are you smiling?
I'm just listening.
Okay.
He's
Theater
enjoying
of
the
mind.
conversation.
Yeah.
He likes where AMC's at.
Do you think that was a nefarious smile? Like you're thinking, what's he thinking in the back?
Oh my gosh, I saw you lighting something on fire with that smile.
That's right. Like laser vision.
Exactly.
Yeah.
So NVIDIA at the 30 ATR isn't somewhere where I would personally want to start a position. That's extended. Doesn't mean you can't go higher. It's probabilities, and I engage in probabilistic trading and investing. I want to give myself the most amount of edge. And so where would I want to participate in a stock like NVIDIA or any stock? I want to get it coming through the mean. And you can do it a couple different ways. You can say, well, if it plows through the mean like NVIDIA did here on the gap up, you could buy it. Or you could wait right at the 21. And then let me switch charts up with you, combine charts, because I always say, I'm fond of saying there's nothing in absolution. You don't want to use one piece of information. You really would like a preponderance of evidence, okay? And so when I look here now at NVIDIA, I can see the 21 is the pink line. That's the 21, or the mean. Man, that smile is...
I'm sorry, well, you mean nothing in absolutes.
I say absolution.
Don, can we get a ruling, please?
Slightly different meaning, Don, right? Absolution means like forgiveness.
Big different meaning.
Big different meaning.
Absolution is forgiveness.
Absolution is forgiveness.
Absolute.
Absolutes means there's no 100% all the time.
Oh, I wish someone would have told me that years ago.
Yeah.
Been saying it wrong
Your
for
English
years.
teacher in high school, maybe?
We didn't have that
You didn't have English in high school?
at Conrad Weiser. So
We had extragenous last week, along with Michael Strayer.
yeah, which is a mix between Michael Strahan
Yes.
and
Michael Saylor.
Michael Saylor. Yeah, Michael Strayer.
Man of many words.
I think Strayer is also a university too.
I think there's a Strayer.
There is a
There's
Strayer
yeah.
University.
Yeah.
So what you can do here is get an 8, which is the green line, an 8 coming through the pink line, or a 21, or the 5.
Both exponential, all three
Yeah.
exponential.
Or the
moving
5 coming through the 21, and you can use that inflection point as your trigger to get you into a trade. So oftentimes people will have the idea, like, I'd like to make, like someone might say to me, Tim, I'd like to make a ton of money in AMC. Awesome. Glad that you have that goal. Well, how can we help you achieve that goal? You have to wait for your pitch. And so my pitch is at the mean, at the 21 exponential moving average, because I believe that presents to me the greatest risk reward. And then I need a trigger event. I need 5 exponential crossing through the 21, or the 8 crossing through the 21, which signifies what, Daniel? Price momentum.
Short-term momentum is accelerating faster than the midterm momentum. So the probability suggests that in short term that stock's moving higher.
100%. And that's what most people trading the market want. There's very, by population, it's this tiny amount that wants the market to fall, right?
And it also gives you more breathing room. So if you get a little bit of a boost at the very beginning of owning that stock, then it's easier to hold through pullbacks. If you buy it at an inopportune time and all of a sudden it turns around and you're down 5% right away, well, you're already right around your stops. You don't have a lot of wiggle room.
So although this stock may traverse higher in the near term, I don't know, it's extended. And it's extended off what? It's extended off the 21. So if I look here, how high is it extended off to 21? What is price at 703? We're about 10%.
Oh, you're looking at NVIDIA. Sorry.
Yeah, we're about 10% off the 21. I think for me, my comfort zone is I don't like to buy. I like to really buy within 1 or 2%, maybe 3% of the 21. But that's just the market environment we've been in. NVIDIA might be a little bit different because it's got great earnings. There's a chip shortage, and it's going to split 4 for 1. So
it also has been bucking the trend relative to the other semiconductors.
Mm-hmm.
It's been stronger.
Only since they announced that split though.
Yeah,
right.
And then they had earnings.
Yeah, I was talking about recent.
It's running similar to the way Apple and Tesla ran after they announced their splits, and that's a conundrum for people like us that do like to look for low risk entry points and sell extended stocks, because these are the types of things that you can just keep going and going and going, and taking some of your position off, you can just watch it keep going. Special stocks, really, it's the Pareto principle, is what you go back and you'll see that 80% of your gains are probably made by 20% of your stocks. So it's the never-ending question of when do I let it run, when do I take some off?
So let's answer it. It's a great question Don poses there at the end of the sentence. So let's go back to AMC. And so the best part about the show, Stock Nerds and Market Lovers, for those that are new to the show, it's not scripted. Meaning, I have
never rehearsed.
I
Never
have
once.
my notes, and that's my guide of where I want to go, unless I see something at the last moment, like the guy who created the timeout. As we were setting up technically for the show, and I'm like, well, that's interesting to me. And so,
ooh, look, shiny.
yeah. And
right.
so the fellows don't know what I'm going to talk about. So when you get what it does is it gives you an authenticity and an honesty to the show. Like that, what you just heard Don say was not pre-thought. It was his honest top of the head comments, which is what I want, and which is what I think viewers want, because it makes the show that much more interesting. And that's why people are attracted to the brand that is Revere Asset. And so now I come back with the same charts setup, but now I've got AMC, which of course is dominating the news. And so we'll just, real quick before I do that, let me shrink it down a little bit so you can see this at home. I'm going to draw the mean there. There's 1, 2, and 3 to the downside, plus 1, 2, and 3 to the upside. And so where could you have gotten NVIDIA? Yeah, you could have gotten it right here.
AMC, you mean.
AMC, pardon me, thank you. Trending right at me. It's all scrunched up because this stock was trading right around $10. Right when it hit 13, didn't quite get back to the mean. And then it made this tremendous move up to 72.62. It's trading currently 53.
Went up 100%.
Yeah,
in one day.
Yeah, and
90, close 90%.
And it's that kind of once the stock is moving like that, there's no predictability to it or consistency to that move. And so what I like to tell people is you got to wait for that pitch. If you think that a stock has a tremendous amount of upside, just wait for your pitch. AMC has been doing nothing, and then they started selling. Then they started selling stock, and it kept getting
the day, day after that huge up day, they said, "Oh, we need to raise a few hundred million in new stock."
Keep getting snapped up, and so, but you could have bought AMC at 10, and he was like, "Tim, that's hindsight." Well, let's just put GME in here. Like GME is kind of taking second fiddle to
GameStop
to get to AMC, and here's GME just on 514 trading at the mean 513, 514 around 161, 162. GME is currently 254. That's good money, right? And so, well, what about what would have tripped me into it? So it doesn't matter what stock is on your watch list. You can get tripped into these things fairly easily if you have just a couple simple rules. And so here is the mean, or the 21, that pink line. I'm drawing over it right there. You can see that, and they're below it on this daily chart. You can see the 5 coming through the 8 here, coming through the 21, and you get tripped into GME somewhere in the 160 to the 165 range. And that's that. It really can be that simple. And if you want, now we screen at Revere for the top fundamental and top technical stocks. So it's about a 70-30% mix, top fundamental, top technical, one of the rare firms that actually does both. Okay. Most people, like if you ever hear somebody like Stephanie Link comes to mind right off the top of my head, she's a fundamentalist, and is it overvaluedist or undervaluedist to describe her as a person? And from what I've seen, and I don't think that helps you, because you're going to miss out on some tremendous stocks throughout history. Like you would.
Some things you just keep getting quote overvalued.
And I'm not saying AMC is one of those stocks or GME is one of those stocks. You can go back to the 90s and look at a stock like Dell, or
Cisco Systems,
or you can look at a stock like America Online when it was making tremendous moves. And how many people missed out on those types of names because, Daniel, they were overvalued.
I got another question, a follow-up question. Yeah. How many people held AOL and wrote it down?
That's another thing. So what you need is a system that, one, gets these stocks on your radar. And I don't think anybody needs a system to get GME or AMC on their radar. But great. So you trade 2 names in your life. Who cares? That's fantastic. Now, what gets you into the highest probability trades? It's waiting for your pitch at the 8 or the 21. Now, is GME going to come back to the 21 anytime soon? Hell if I know. And here, that's the honest to God's truth. But the moving averages can go up and meet it. You just have to be willing to wait for your pitch, because when you wait for your pitch and then you get it and then you pull the trigger, the rewards can be absolutely fantastic. And you can do it with Don. Give me any, or Hunter. Give me any stock, man. Any stock. I don't care which stock.
Just any stock in the world.
Any stock in the world, brother.
Futu. F-U-T-U.
F-U-T-U.
I thought you were
He just
saying
paused.
something bad to
He
Tim.
paused. He paused.
Food to you, Tim. Food to
He
you.
paused at F-U.
Challenging. That's what
Yeah.
I wanted. Yeah.
Hey, I'm gonna pause at the F and the U and the Futu. And so here's Futu. And so let me draw out the mean here for the folks at home. So here's the mean, and there's 1, 2, and 3 to the upside. 1, 2, and 3 to the downside. And so here's Futu, gaps up over the mean, somewhere around what level is that? Around 130. We'll just call it the 130 level. Now let's look for the trigger event that gets you into. I keep wanting to call it futon. It is not futon. It's Futu.
Futu.
Bank out of China. And so here you are. There is the 5 coming through the 21. Here is the 8 coming through the 21. You would have tripped into it somewhere between 130 and 135, and now you're trading 156. And so, and there's and these charts, if you haven't noticed, there's a bunch of reasons why you won't get into the chart. Like, well, it's got some overhead supply over here, and it's got the 50-day moving average here, and then that's going to serve as a restrictive barrier to its further price progress. And then look at the 34. Is it going to get through there? And look, if you just remove all these, they're just lines on the chart, folks. And the only reason why these particular lines are on my charts is because the algorithms are programmed to them. That's it. Like if I knew of another line that the algorithms were programmed to, it would be on my chart. And so you don't see me in my videos often using the chart you see on your screen. I use the average true range charts. There's no moving averages on this chart. It literally is just price channels based on the last 21 days of price action, and then multiplied 1, 2, and 3 times to the upside. That is Janet Jackson. Davey, I'm looking at you like you know what Janet Jackson sang. Zach.
Oh, okay. now you're really desperate. Go ahead.
Did Janet Jackson sing "Free Your Mind"? Free
No
your
idea.
mind.
No idea.
Can we
Don
get
Hunter? Anybody
Oh,
know?
Don? You think Don knows that?
I bet he does.
If you're reaching for me, I mean,
Don
you're-
does not. Don,
you
I got
free your
Don.
mind.
I don't
Well, give
think
it a
Don
chance to
could.
speak. Don.
No, Don could not name one Janet Jackson song.
Oh, Don, he threw down the gauntlet.
I think he's doing a Google. Hold on.
Control. Control. Janet Jackson sings Control. But En Vogue sings Free Your Mind.
In Vogue, yeah.
Ah.
So what these charts do is it allows me to invoke the moment.
That's brilliant.
Thank you.
Thank you.
So
Keep working on that vocabulary, Tim.
so what this allows you to do is start capturing the move. And so, well, how would you scale into something like this? So you could say, well, once you get your trigger, if you've got a 10% position you want to build, or a 5%, it doesn't matter what it is. So let's say you want to build a 10% position. You could put 5 on right away. And if it starts, trading in your direction, you could do another 5% to add on to it. If it runs away too quickly, like it gets away, like I said, I want to stay within 1 to 3% of the 21. If it gets beyond there real quickly because it's a mover, we got ourselves a mover. At least you're participating. But what this allows you to do is participate. And well, Tim, what if it starts taking off with me? Just keep your 5% on and be happy about it. But if it were to pull back to the 21, you could add your second 5%, and then now you have your full position. And so there's a lot that can be done. And what it does is it gets you out of this nonsense that's just dominating television and financial media, whether it's Twitter or written word. And like, who gives a rat's ass if a stock is overvalued? Who gives a rat's behind if what somebody on TV thinks of the stock? What you want to do is have a system based on your rules that allows you to participate. Because oftentimes I'm convinced that half the people commenting on stocks, they're not participating because they don't have a set of rules. So they just talk it down.
A lot of it's marketing. Those guys are pay to play.
And so, well, what if you're wrong? What if it doesn't go up? Because now you've got stocks that are all going higher. Well, let's say that you got to close under the 21. You could say, I'll sell half my position. and I'm going to take some risk off the table. Or if it closed below the -1 ATR, sell your position and be done with it. And so you're managing risk. What you want to do is keep your losses single digit as best you can. And sometimes you can't help it because the market gap's down or something extraneous.
That was right.
Oh,
That was Tim. Bring the bell for
I
Tim.
don't believe it.
Bring the bell for Tim. He hit one
Do we
right.
have a word bell?
It's
I'm
not
looking
right.
right now.
It's not right.
That's the wrong word.
Oh,
Extragenous is kind of out of the ordinary, right? Out of
No,
unusual.
it's exogenous and extraneous.
Extraneous is a better word.
Extragenous is not a word, Dan. It's a creation of two words that Tim came up with last week.
Extragenous, okay.
I've got you convinced.
I just had, now I've got to go in the Tim corner. I've got to go sit in the Tim corner.
with
Dr. Spots.
With Dr. Spots.
So
Pausing for a commercial note, NVIDIA's split date is effective end of business June 21st.
oh, that'd be interesting to see how that handles how it does.
And
handle
as far as the tackling of the football, Hunter, you should know this because it was an Alabama guy, Tommy
Jesus.
Lewis, in the
That's
1954
right.
Cotton Bowl that came off the bench.
I swear there was one more recently.
There was one about a decade ago, 8 years ago, something like that.
Had to be.
So you mean Alabama was cheating?
Oh, shocker.
In 2018, it happened in Minnesota.
Oh, was it?
High school football?
I think there was a college or pro game.
This is a Minnesota high school
if
football
it
game?
was, this would be.
I thought the coach got
massive news
suspended.
event.
It was a strength and conditioning coach. I thought that came off only a strength and conditioning. Can we just be
I think there was somebody that tripped somebody when they were coming out of bounds.
Yeah,
No,
well, no. The guy was running down the field for a touchdown, and the guy tripped him.
No, that has
Maybe
not happened recently.
maybe.
If any listeners know who we're talking about, email us.
It had to be a strength and conditioning coach because only a Mongo type would come off the.
Wow.
Oh, come on.
Is it a Mongo type?
Yeah, Mongo
Are
type.
you stereotyping?
Me lift weights.
Had to be a strength and conditioning coach.
Me go trip. Me get caught up in the moment because I don't play anymore, but I butt heads with. That's what strength and conditioning coaches do, right?
Mongo just pawned in Game of Life. Blazing Saddles.
Yep.
So you can use this. Look, whatever you're using at home, the worst feeling I think often is you're not participating in something that is clearly running up and you want to. So you just, instead of talking it down, well, how do you find that? You can screen for it. In Thinkorswim, you can screen for it. If you email me, tim@revereasset.com, I'll send you. I've got a screen, 8 and 21 cross screen. I'll send you a moving average stack screen. I don't care. We're here to enable you to become better investors and traders. And then that moment in time when maybe you potentially need help or you have someone in your family that would like some assistance in doing all the things that we do here at Revere, we'd appreciate it if you passed our name on it, 855-732-5932.
For clarity, you mentioned the fundamentals. GME and AMC would not show on our screens because their fundamentals are horrible.
No, they are. They absolutely are. But for I certainly don't want to make argument's the wrong word. They're just being talked about right now. That's all. And there's a bunch of people that don't know how to get in. Like somebody, and my heart goes out to the person because somebody bought 7262. Like somebody bought 7262 right now, and is sitting
with diamond hands probably.
With diamond hands, yeah.
Diamond
and
hands, yes.
let me just show you this on my screen here real quick. So we'll do AMC, which it experienced what is known as it had just a run on. I mean, more options were traded in AMC yesterday than like ever before. Just craziness. But look at the options for. There's 0 days today, right? Look at the options that people bought all the way. So they created options all the way out to $145. And the open interest going into the day's trade was 41,000. You're up to 66,000 calls.
Wow.
And you can't, it's very difficult to sell calls in these stocks. So these are just people going long.
Look at the June 18 145s and 100s as well. I was looking at them a second ago. It's insane. I think there's 15,000 of the 145s have traded or more.
Take a handle, yeah. And so, yeah, here you go.
And look at the price. I mean, you're
Yeah.
paying $530, $520 for one contract that requires a 200% increase in the next 2 days just to be in the money. It's crazy.
And so, think about this. You're right now, Hunter. You did something so awesome there, and I really appreciate it. Let me just walk you through this, what you're looking at in your screen, stock nerds. The volatility is right here where I'm circling. It's a 400% IV.
Oh my gosh.
So let me explain what that means. And so normally, like look down here as we go down the chain. Now, this type of stock will have a huge implied volatility, but you can see as you get away from the epicenter, you're coming down to 300, kind of like in the 250, 200, 200 area. So the easiest example I have is an automobile. You need a car, and the only car on the lot is a Ford Festiva, which is honestly a Schwinn bicycle with an engine. And so, so you want the Ford Festiva, and normally a Ford Festiva is it's a $10,000 automobile. But because you are desperate for a car and the dealer knows it, he's going to charge you $50,000, and you go and pay it because you want the car now. But if you could just wait a few weeks, it'll come back to $10,000. And so that's what the excitement generated around AMC is causing the implied volatility. Well, who causes that excitement, Tim? Is it the traders or is it the market makers? It's the market makers with the implied volatility. So traders cause the excitement. The market makers, the people that sell you the calls and the puts, have to respond because they don't know which way the price is going to go. And well, how do you know they don't know which way the price is going to go? Not only do I have this implied volatility percentage, I've got this number here, this dollar calculation, this plus or minus calculation right here. Market makers by the monthly expiration in a couple weeks, 14 days from this Friday, is plus or minus $41. Go up 41. That's what they
Expected move.
That's what they've had to price in to these options, and that balloons out the volatility. So Hunter is so astute here to point this out to you. You're paying $500 for, I mean, it's less than 1% that it's going to go up there.
You got to have some kind of 400% move before you can break even. Sort of. It's not quite right, but I mean, you've got to be more right than the expected move, and you're paying for the implied volatility.
Right. And so
think about it like this, just for perspective's sake. Say you buy that 145 call for $500, and say by June 18th, AMC goes up another 150% to 125. That call is worthless, even though you could have sold it at some point in that time frame. But the point is, AMC could go up 150% in the next 2 weeks, and that 145 call is going to expire worthless on June 18th if it's not over 145.
And at that point, for that price of a call, isn't it better just to buy a couple shares of the stock, and then you don't have to be exactly right on 2 weeks? If the stock goes down for a little while, you still own the stock. Time will bail you out, or could bail you out.
And so the theta decay on these, let me see if I can pull it up. The theta is just absolutely.
That's going to be huge if the stock doesn't move fast and quick.
Right. So the theta, you're losing 53 cents every day on, and this is, you can see.
You got to multiply that by 100.
Numbers
so it's $153.
Yeah, it's not. This isn't for the faint of heart, but there's people in there buying these right now.
I mean,
no, it's
$53.
Yeah.
There's people. If you're buying, you're gambling that within the next few trading days, AMC is going to go up to 80, 100, etc. And I mean, there's, but it is a lotto gamble at this point.
To just show
same way it was with GameStop.
AMC has a 94% chance of finishing out of the money. That's what the OTM is up here, stock nerds. So there's a 94% chance that it's going to finish out of the money.
Meaning you won't cash in.
Right.
94% odds, huh?
Yeah. So
against you, yeah.
Right.
It's not that good.
No. And so So with 6%, so you're saying there's a chance. So
Yeah.
how is the best way to trade this? And I think Danny has it right. Just buy the shares. Just buy the shares because it's cheaper. Because there's a premium associated with these calls that almost makes it prohibitive. And Tesla has this issue as well. And so it's just easier to buy the shares and then ride the wave that way. But really, I think that discussion is probably more helpful than what I was talking about with triggering into the trade.
Right.
But there's somebody out there that bought 72, 62, and now is sitting on 20 points of loss, and that sucks. And so, well, Tim, what happens when you get a runner? Well, you just trail it up with a 3-bar stop, which I've done in multiple videos. But you have to have some mechanism that prevents you from buying extended. And everyone is top tick to stock. Everyone who's ever traded has bought extended, got sold the top tick, and then you develop systems to defend against yourself because that's what you're doing. Night trading, in my estimation, is 90% psychological, meaning you're playing defense against yourself. You're like, how can I prevent myself from? I desperately want to participate. Like, who doesn't want 100% move, Danny? Right?
Yeah.
But what are the odds that that's going to happen? How many of those things? Stocks like this are absolutely why golf exists. When you go out and play golf, like 99% of the people that play golf are not good at golf, right? And so you hit one shot. And it's like that one shot that you remember out of 18 holes, out of, for some people,
Keeps coming back.
352 strokes during 18 holes. You hit one good shot. And it felt good, and it made the sound, and it's like, oh my, you dropped it right where you wanted to. And it's going to get you to go back and play golf 52 more times this year. And stocks like this being talked about in the media and hyped, and everyone's making money with their diamond hands. And what the hell is it? It's like diamond claws, not hands. Like seriously, like I felt like I was doing the
Edward Diamond Hands.
Jaws hands or something.
Yeah, like Edward Scissorhands, except with diamonds. So you have to have mechanisms, and sometimes when you miss it, you just miss it. It's cool. It's cool. You're trying to put the probabilities in your favor, and you're trying to rid yourself of the FOMO. If you think of FOMO like crabs, nobody wants crabs. But if you think of FOMO, if you can rid yourself of the FOMO without the pain of getting crabs, you'd want to do that. That work for you, Danny?
Mm-hmm.
Good. I knew those words.
Got him.
Nailed them. So here's where I make a Connecticut School of Broadcasting upstairs transition to what Danny wants to talk about. Can I lay it out?
Sure, you lay it out.
Tim, if I didn't know any better, I'd say you might be a little spooked about what Danny's about to say.
Well, here's the thing. Danny wants to talk about I'll lay it out for the listener.
It'll be high level.
1 second.
It's high level.
1 second. Because I'm also playing defense against Don here too.
That's true.
And so, Hunter, I'm going to need your help as well. You just jump in, Hunter, whenever you feel the
Hunter, heel.
No, Hunter, you just jump in with anything. You can shout out, Hunter. You can shout out for the love of Nick Saban, and that would absolutely break the flow of what's about to happen. So,
Zach, can you mute Hunter?
We can have a code word like Little Debbie, which is what Coach Saban eats. Little Debbie, the oatmeal cream cakes he eats every day.
Oatmeal. I don't know if they're called cream cakes. Might be cream pies.
Oatmeal cream pies.
Little
Is that
Debbie,
what they are?
I don't know that. Yeah, I know.
That's his breakfast every day, right?
Yeah.
Who's that?
Yeah,
Coach Saban.
Nick
Thanks for
Saban.
breakfast.
Nick Saban.
Nice.
He eats them all
Plays
day
for
long.
Alabama, right? Coach for Alabama.
Coach. He's the coach.
Does he cheat, Hunter?
You know what? No, I would think that he's got everybody looking for some hole in it. Like, think about this. He's got NFL players 3 deep at every position. That's not I'm not exaggerating, am I, Hunter? There?
No, he's the greatest of all time in college.
Yeah. And not with the Miami Dolphins, with college. And so he just ran out on the Miami Dolphins. No. He ran out on the Miami. He left town in the middle of the season, didn't he?
It was an odd scenario. I remember the whole fiasco with coming to Alabama, leaving Miami, but I remember is that it was weird.
Who's the dude that was cheating on?
So he's great in college, but just sucks in NFL.
Who's the dude that was cheating on his wife that left in the middle of the night?
Jimbo Fisher.
No,
You're thinking of Franchione? No.
no. The guy coached the Falcons, and he went and like took a job, and then he fell off his motorcycle, and he made up some story.
Petrino?
Is it Bobby Petrino?
It is Petrino.
Went to Arkansas and then went to Louisville. Yeah.
Yeah.
That was
that was the. You want to describe odd situations? That's an odd situation. Dude shows up at a press conference with one of those ambulance chaser lawyer neck braces on, and he's got all these scratches. And here he fell off his bike, and his girlfriend fell off his bike. But he's married. Oops.
Oopsie.
Here's the thing about Nick Saban and the Dolphins. They had a decision to make to get him a quarterback, and they passed on Drew Brees because they didn't trust his shoulder, and they went with Dante Culpepper.
Oh.
And the rest is why he's back at Alabama.
Oh. Well, I'll tell you what. Seems like
he said, I'm running the show. They said, no, you're not. He said, see you later.
Missed opportunity there. But
now they have Tua. It's all come full circle.
yes. And when they fire the Dolphins' current coach, they'll make a run at Nick Saban to reunite him with Tua.
That's right.
Just like who got reunited with Tim Tebow? Urban Meyer. Urban Meyer Urban Meyer bringing back all the hits. Anyway, so I'm playing defense against Don. But to get Hunter, to your point, Nick Saban must be scrutinized on the recruiting trail.
I am so sorry I brought that up, Stock Nerds, that one line.
That's all right.
We're right about to go to the good topic.
Almost.
And Tim takes left.
So here's the Danny topic of the day. He wants to talk about taxes, and then he's going to mention Joe Biden in here because it's Joe Biden. So I'm not only playing.
I wasn't even going to mention his name at all.
Well, okay, now you say that.
I know I wasn't.
Okay, but Don, who is an incendiary when it comes to Joe Biden, incendiary device, excuse me, when it comes to Joe Biden and his policies, has the potential to just pop off like it's the 4th of July, and I can't see Don to see when his neck, which is now in the shape of a fireworks from the Bugs Bunny cartoons, is going to pop off his shoulders, and so I can't see them anymore, and so I'm playing defense against you because you've got a highlighted sheet, which is like a script.
It's a one-page
with
sheet
a bunch
with
of
a few
notes.
Bullet
And then
point.
I've got Don, who is just ready to jump in. At the moment I give airtime to, like, I take a breath, Don's going to go in there, and he's going to go, for the love of Tip O'Neill, and just go off. And so...
I guess that's why you never take a breath.
That's it's 100% why.
He doesn't want to give you don't want to give you in, like a pause.
Yeah, I can't even breathe over here. So...
You're turning purple.
Zach, put the camera on me quick.
Real quick. Fast.
So Danny wants to talk about the tax. There's a lot of issues here with this proposed tax issue. The interesting angle for me when Danny was talking to me about this as a potential topic for the podcast earlier in the week, the interesting angle for me is the whole life insurance movement that's taking place. And which is a weird thing to say, right?
Well, life insurance, your whole life is actually a type of policy too.
Yeah.
You just meant the life insurance angle.
Yeah, because the industry, like, I think it's no secret that I don't care for this industry as a whole. Like, I like our role in this industry.
As a fiduciary?
I like how we present information in an earnest and honest manner. We don't have any salespeople here at Revere. Like, there's a reason why. Like, everyone is an executor, not executioner.
That was correct, Tim.
Thank you. That was executor. And so this industry is just, it's got so many loopholes and nefarious traps. And somehow this new tax policy has done just this. And when Danny was going over it with me, it was interesting. So I'll let you tackle it. But just know.
I know you're right there on the...
No.
Mute him, Zach.
This is the greatest 45-minute intro to
whatever
Danny's
But just know that Hunter is going to come off the bench like a mongo.
We're muting both of you.
Like a mongo, and he's going to trip you if need be.
All right. So I always like to look for the angles or the lobbyists behind the scenes. I want to know what's really going on because, let's face it, those 535 bums in Congress, I don't care which side you're on, they're not writing the bills. Hell, they're out there at the cocktail bar and schmoozing people.
I agree.
It's the lobbyists that are doing it. But this tax proposal they're doing is going to be the biggest wealth distribution in the history of our country, but it's not going to be from the rich to the poor. It's going to be from the middle class to the government.
Hey, do
That's
tell.
the part that I can't stand. It's being sold as, soak the rich and help everybody else out and reduce taxes on the poor. Well, the poor don't pay taxes, until you get to certain levels. So the whole thing is disingenuous. But a couple of things. So they're going to moderately raise in the rates on the highest earners from 37 to 39.6. The one thing that's going to hurt they're going to raise the corporation 21 to 28 is what they're talking about. But then they're going to put a 15% minimum tax on corporations that either through depreciation or some other things don't really have they don't really have a lot of income because they've got non-cash items, amortization, depreciation, and that's okay for some of the larger corporations like the Amazon, some of the big corporations that pay very little tax but have a huge cash flow. I kind of get that, but if you want to do that, modify the tax, go to what's deductible. But for small businesses, that's going to sting. That's going to hurt. Okay.
Why is it going to hurt?
Well, because small businesses that are starting out that have some of these depreciation, have some of these items, they're just starting out. They're hiring a few people, and all of a sudden they've got to pay a minimum tax. Most of them pay a lot of the profit out to the husband and wife or the family or the business owners.
If there is a profit, most small businesses struggle with any.
Right, but
Right.
as you go from losing money, legitimately losing
Right.
money, to making money, you've got some of these loss carry forwards that, hey, they're going to limit now.
Right.
And you've got, so you can offset your losses that you accrued for the first couple of years. Once you get to the growth mode, you get to offset the early profit against your previous losses. So the first few years you make a profit, you can kind of keep, you don't have to, it gives you kind of a leg up, a head start. That's going to be tougher. That's going to be harder for the small businesses. Now, the biggest thing, though, is they are going to, now the capital gains rate, everybody's heard about that. They're talking about really raising that up to 36, 39, but I'm sorry, 43.4%, but that's only if you make over $1 million a year or more, okay, in income. So that's going to affect not a lot of people, okay, I get that, but here's the big one.
All right.
They are going to eliminate the step up in basis. So if I inherit,
Pause. I want you to have a break in there just for a second. You're about to explain what is a step up in basis.
yes,
That good. I just wanted
yeah,
people.
no, yes, I am.
You were running there, and I want people to understand. You're now explaining step up in
So
basis.
if I've got a business, I've got a stock, any stock, ABC, and my parents, my dad or my mom, the last surviving spouse, bought it at $50 years ago, and then when I inherit it, say it's at 300 now. My new basis, I get an adjusted date of death step up. So now I get that stock at 300, not 50. And so if I sold it right away, there's really no capital gain. There's no tax. But here's the problem. So they're saying, no, you get that cost basis at 50, not at 300, which, okay, I kind of get. But it's going to be due right away whether you sell the stock or not. So the day that I inherit that, it triggers a taxable event, and I've got to pay the tax. So now I'm forced to sell the stock. Hang on, let me go.
I know.
I'm forced to sell the stock to be able to pay that tax. It's going to put pressure
Just
on the markets.
Pause for a second, because what Danny really, I don't want to put words in your mouth, but I want people to understand the true nature here. This isn't a trust fund baby situation, and we're crying boo-hoo.
No.
This is your parents worked their asses off.
Already paid taxes all their life.
Makes sense.
They have worked their asses off to give you as their child a better life than they ever could have dreamt of. And they want to hand down. And it doesn't matter if the asset is a stock or if it's a piece of real
I was
estate.
getting to the businesses.
Yeah,
That's where it's really going to hurt.
It doesn't matter what the word is asset. It doesn't matter what it is.
Right.
It matters that it has value to it. And the way it used to be is it could be transferred to you. And then when the new owner of the asset, the child, in this example, were to go sell it, then they would owe the tax.
Once they sell it.
Once
yes.
they sell it. The new distinction that Daniel is talking about is the moment it's transferred to you, you owe the toll.
It's unrealized gains, not realized. Yes.
And that is a tremendous, it's dispiriting.
That does make a difference for sure.
Well, now let's add the combination. So not only that, they're going to lower the estate exemption. Currently it's 11.2, but it used to be anywhere from 3.5 to 5 million. But they're going to take it back down. They're talking about $1 million. Now that doesn't sound like a lot. That sounds like, well, $1 million. That's a lot of money. With real estate prices the way they are, parents may own a house that 4 or 5 years ago was $200,000. Now it's $650,000, $700,000. They got an IRA. You get to $1 million pretty fast. Once you get over that $1 million, now you're talking about 40, 50% tax on everything on there. So not only are you going to have the estate tax, you're also going to have the capital gains tax from the appreciation. You're going to get smacked twice.
Would this happen? Let me pause you because would this happen if a house was in a husband's name and then ownership transferred to the spouse?
You're still going to get the unlimited marital deduction. It's when the second to die happens.
That's
yes.
And so what you're getting here, and it doesn't. A lot of people they vilify the reason why if someone goes, Tim, this sounds like a really great topic. Why would you be playing defense against it? Because we have a YouTube audience that's growing and may not know the context of where we come from on the show, and which is always, I believe, from an earnest point of view. The word million has been vilified. When you say someone who makes $1 million has an asset that's $1 million, achieving right now is going under tremendous scrutiny, right? Reaching up and pulling yourself by the bootstraps, and God forbid your parents have stayed in a house that has accrued that value, and you're fortunate enough to have them handed down to you. You're now going to be burdened. They're leaving you with a tax bill that used to not exist.
And they may force you to sell the house
to meet the obligation of the tax bill. And this, it's not right.
Well, so here's the other thing. The term millionaire, that was created years and years ago, and it's always had this like rich connotation. If you adjust for inflation because the Fed printing and what they've done in the 70s, $1 million probably is more like 4 or 5 million now. It's a big deal. And so $1 million is not nearly the same amount as it was just 20 years ago.
Hunter, can you get me the $1 million calculation? Just go on Google, please, and do an inflation calculator. Just $1 million from 20 years ago and 30 years ago, please. What it is in today's dollars.
Yeah,
Thanks.
I could tell you from 1917, the dollar's lost over 98% of its value.
Great. Now let's bring it up from when you were a child,
Yeah.
from 1917, and let's make it a little more relevant for the audience.
I think it's about 35-40% at least.
We'll see. Yeah, we'll see what it is. But this step up is
it's huge.
It's a huge deal. And look, none of this has been.
Well, so let me keep going with it. So here's the thing, though. They always talk about it soaking the rich, the wealthy. Look, these ultra wealthy people, they've got a flat 5% asset tax on their stuff, and then they pay no capital gains, no income tax, they put it in a family foundation like the Gates Foundation.
They hide it.
Like no, that's not hidden. It's under the tax code. They put $100 billion into a family foundation where the only thing they have to do is give away 5% of the corpus, and everything else grows tax free. So now, as long as they beat 5% on average every year, say 10%, like Warren Buffett, 12, 10%, that thing is now growing. It never pays $1 in estate tax. The only time that someone will pay income tax is if they take a salary out of it. Mm-hmm. But the family now are in perpetuity through generations are the ones that are the board members. So they control it. They get to dole out. Guess who comes a-calling? Because the charities like Red Cross, these big multinationals, they know that, hey, Warren Buffett's got to give $30 million a year. His son's the board member. Let's take them to Nice or Monte Carlo or Hawaii for a week, put them up, give them free food because he's got to give away money.
Hold on, let's just pause.
All I'm saying is their expenses for the year are very low, so they pay themselves a low salary.
Right.
And they get by, and the $100 billion never goes through any taxes.
So your point with that anecdotal story is that the people, this bill
Is disingenuous. Okay.
that this bill isn't going to affect the people it's meant to affect.
Well, that's who they say it's. Yes.
Yeah,
Yes.
it's not going to, like, when people they think of. I mean, can we just be honest? Jeff Bezos looks like the Uncle Moneybags character from Monopoly.
Yeah,
looks like Lex Luthor.
like-
Yeah.
Like, right. So you want to go after Hunter? You got that number for me, bro?
I got some interesting numbers for you. Just let
Give
me
it
know
to
when you're
me.
ready.
Yeah, give me. I'm ready right now.
All right. So I've got 20-year, 30-year, 40-year, and 50-year, and I think all of them need to be said just because they're interesting. Okay.
Okay.
All right. So the first is if in 2001, so 20 years ago, I purchased an item for $1 million, then in 2021 or now, that item would cost 1.15 or 1.5 million. So
and that's
for
based
20
on
years,
government numbers, CPI, which are understated.
correct. So 30-year, 1 million is 2 million. 40-year, 1 million is 3 million. And if you go all the way back to 1971, 50-year, 1 million is 6.6 million.
Oh, I was close.
So
You're close.
I
pretty
understated
interesting.
it.
That is
Really close.
that's really
Yeah.
interesting.
Okay, so let me take it a step further. So look, Congress knows that there's going to be this huge wealth transfers. All these baby boomers die, and there's these trillions of dollars out there, and they need the money. They want to figure out how to tax it. They want that money quick. So the people that this is going to hurt are the people, the middle class, that's going to inherit this money. They've also stopped. So that's one thing. It's going to force pressure to sell. Now, they say that there's going to be an exemption for farms, family-owned farms, that they're, like land-rich, cash-poor, that have been there for a while, and I'm sure they're going to put stipulations. You can't sell it for 10 years, whatever. But they're not really addressing like a family business, like a laundromat or a dry cleaner or a small investment company or whatever. And so all of a sudden you inherit a family business that your parents did for years. Yes, it's got cash flow. It may make a couple $100,000 a year, but they value it at $5 million. Now you got to sell it.
Right.
Now you don't have any, and you probably won't get fair value because you're under distress sale. The other thing is they're going to stop they're going to limit like-kind exchanges.
Is that a 1031 exchange?
1031 real estate exchange. So they're going to put caps on it so that it'll slow down real estate, in my opinion. The one good thing I do like is the hedge funds and the wealthy hedge fund guys and private equity guys. They can't do that carried interest thing where they don't pay any income tax on it. It's all capital gains on the back end. That I like. Point being is,
what would you do? What would your suggestion be? Because the bill is targeted towards, honestly, we have vilified.
No, that's what they're saying. It's
Right, no.
targeted to the middle class. That's what it is. Period.
Okay, I'm going to just ask you to let me finish.
Okay.
All right. Because my question to you is, what should the bill be if you want to tax the ultra wealthy, like the Bill Gates, like the Warren Buffetts, like
The Bezos.
the Jeff
Well,
Bezos?
Musk.
look, if you really want to do that, you need to put limits on family foundations,
Mhm.
and you need to go under some of their tax loopholes. But again, the problem isn't taxes; it's spending. They're out of control spending.
No, the problem is the tax code, right?
Oh, the tax code is way too
that-
complicated.
right.
Yeah, this is going to make it even worse.
This is going to overcomplicate
Yes.
because there's going to be carve outs, like you just mentioned the family farm carve
And
out.
by the way, I know, yes, I didn't mean to interrupt. When you have lower corporate tax rates and lower income tax rates for individuals, the Treasury brings in more money. That's been proven.
Right.
So they can argue about bullets or feeding the poor. That's a different argument. If you want to stimulate the economy and bring in more revenue, you want to have lower taxes. not higher taxes.
I would argue that the pro-tax camp, anti-wealthy camp, has a much better PR campaign
Oh, absolutely.
than the Treasury
Yeah,
gets.
no question about
Yeah,
it.
like
No
the
question about it.
PR.
But to answer your question, you would go after family foundations. You would go after certain things where they've got to pay a minimum tax based on the assets that they control.
Right. And so, Don, how is this going to affect markets and stocks? I mean, because if this starts getting, because what was proposed, and I believe Joe Manchin is going to be the settler of all this. Joe Manchin is now the dean of the Senate, and so it's right now. Like I guess Joe Biden proposed this back in April, so they're going to say this tax would be retroactive
to February
Yeah.
28th. Now,
Oh, that's when he proposed it.
yeah, when he proposed it, they're saying they're going to make it retroactive, so you've already missed the boat.
1 second. Hold
Now,
on.
hang on. Let me finish. So a couple of people that analyze this stuff,
Right.
that think they watch how the sausage is made, they believe there's going to be some negotiation. They think it's still going to be retroactive, but it'll go retroactive to the date of either Congress passing the
Sure.
bill or when Biden signs it.
I'm going to just tell you what my playbook is here, Danny. I'm trying to work Don into the
Yeah,
conversation.
I know,
So if you got a hard on for another sentence, go ahead.
Go.
Is Don laughing? Because I'm trying.
Not at all.
Not at all.
He has not laughed for once.
Oh, okay, now he is. Okay. Like I'm trying to get Don in here, and Dave's like, "No, I need to say this one last
Well,
thing."
I want everybody to have a good say. that
Yeah,
makes sense.
and so Don, let me get your thought. Just if they, what does this do to stocks if it is actually retroactive and passes as is, or if they make it at some date in the future, say in the third or fourth quarter of this year?
It sets up a scenario for panic selling because people are trying to lock in lower gains, lower rates on their gains. I can't see how you can make it retroactive, but making it retroactive would probably eliminate panic selling if that's one of the issues. But as far as making it retroactive, Dan, can you remember a single point in time where the tax laws were treated differently intra-year?
They were
treated differently at
So
intra-year, depending on some activity that you took?
Yeah, so they've never done it with capital gains. They've never done it with investment taxes. They've made some taxes retroactive based on income and deductions and stuff like that. But they've only done that about 3 different times. But when they did it, it was such bad PR. They got absolutely crucified. Now I agree with Don. If the bill looks like it's going to stay where Biden said and you've already passed the deadline, then you missed your boat. There's no point in selling. As it goes through Congress and as they start making the sausage, a lot of these high net worth people or even middle class, they'll be watching it. And if it says, "Oh, it looks like it's going to be in 2 weeks, we're going to have a much higher capital gains rate," you're going to see a lot of selling to try to front run that.
Sure.
If that's the way it comes out.
Let me pause you just right there for 1 second, please. Where, who's going to get? It just dawned on me. Like Danny is Danny's genuinely upset at how this is going to hurt the middle class, and I've been trying to quantify even further Danny's points because I don't think it's being talked about enough. How this is going to hurt just everyday people going to work. And here's how it's going to hurt the most. So let's say Don's right, where it gets to where it's signed, third quarter, fourth quarter, somewhere in there. And they make it, okay, that's when the tax date is. Most money that's in stocks is held in 401ks and IRAs.
Pie charts, yeah.
And it's passive.
Yep.
And most of that money, so only about 51 to 53% of Americans hold stock, okay, are in the stock market. And that includes the 401k and IRA holders. They're all passive. They're the ones that are going to get hurt the most, not only with all the changes that are coming. They already are being taxed higher with inflation. Food's at 10-year highs.
Sure.
Gasoline is $1 a gallon higher than when it was a year ago.
The invisible tax.
Gas is what, at 7-year highs? Is that right?
Yeah.
7-year highs? And food's at 10-year highs? So everyone is being taxed right now without one stroke of a pen from the president or Congress, okay? And so everyone's experiencing that right now. But when they if Don's right, and they go to jam the exits because we got to sell now to lock in this lower tax structure, everyone who's told to buy and hold,
who's going to be holding the bag?
It's going to be, yeah, because and someone out there I know the cynical people that are out in our audience. Tim, those are there's no taxes on those accounts, Tim. No. It's going to drive the asset prices down. The value of the stocks are going to go down. That's what selling does. It has nothing to do with taxes. It's like, well, I get 60% dividend yield on this thing. Yeah, but it went down 75%. So how far ahead are you? So the asset prices are going to get driven down to meet the selling. And I think when people stop talking about this, if they ever would, in terms of stock market, I think when people realize that if you were gifted a car, that your father had a muscle car, your mom had something, a value, an asset that gets handed down to you through a will, when they start realizing that it's everyday items,
Yep.
and not just these, they're not even paper certificates anymore. This stand by, Don, exogenous.
Nice.
It's the house. It's the jewelry.
Yeah.
It's everything.
When you put tangibility to the item, not these made up out of thin air Enron stock certificates, right? That only fat cats have. Like when people are unable to vilify, and then they're able to emotionally tie. Well, that was my dad's '66 Chevelle. What do you mean I owe $10,000 on it? Well, we got it here in Kelly Blue Book that it's valued at $100,000, and based on your tax rate, you owe us $10,000 right now, or we're going to repossess that car. But that was the car I helped build with my dad. And so when the right side of this argument, which I believe that we are on, starts to understand how to tie the emotionality to the tangibility, the tangible items in their everyday life. That was my mom's engagement ring. Well, your mom's engagement ring turns out is worth $300,000, and where my mom's engagement, like, can you imagine getting gifted through a will your mom's jewelry, the thing that your father gave her, and you're gonna owe $500,000.
You're gonna have to sell it because you can't.
You're gonna have to pawn the goddamn thing because you can't afford the taxes on it.
Right.
When I say our side, I'm not talking about a political party. I'm talking about a party that stands up for the freaking middle class.
We the people. Yeah.
When our side of this starts to figure out how to articulate how this policy isn't fat cat, rich asshole, shit on them all, but understand that it's your mom's engagement ring, and it's your dad's automobile, and it's the house you grew up in. That's what's going to get caught up in the wash. And that's what I believe you were trying to say.
Absolutely. And I'll tell you taking one step further that's, I know, going to make you happy.
Go ahead.
Do you know the sector, the industry that's going to make out like a banshee on this?
F them, man.
Is the insurance company. So, folks, they've taken away all the loopholes, all the tax planning. They've lowered the estate exemption, or they're going to. They're talking about it. And they're going to take away the step up in basis,
right,
which is going to eviscerate, like we said. So the only way that you are now going to be able to do, or not the only, but one of the few ways that you're going to be able to do estate planning, if you want to keep mom and dad's ring, if you want to keep the muscle car, if you want to keep the house or their stuff, is that they buy insurance to pay the estate tax. And the lobbyists are just doing. I guarantee
they're going to come up with a new policy. It's going to be the tax policy. So they're going to sell. It's going to be like Medicaid Part D. Yeah, it'll be like Medicare Part D, like where they sell you a supplemental policy.
It's a second to die.
It's going to be the tax, the supplemental life. You're dead. You owe us tax policy, whatever that they're going to call that.
Believe me, I got it. It's horrible. And look, here's the thing. As you know, as you know, I've been doing insurance for 30. I mean, I've been doing it for a long time. I haven't done any products for years because I think there's better ways to work around it. They may actually force me back into that to add value to clients if that's going to be one of the few solutions. Here's the good news. There are some new policies and products out there that aren't commissioned. They're fee-based only, and you can go long, double long, short, double short. You can own precious metals. You can own commodity. You can do stuff that will protect you if you have to go that route. Now, hang on, because here's one thing you got to think about, folks. They're going to tell you, if you're definitely going to do this for the whole of your life and to keep it for till the second one dies, then you want a whole life policy. It's the biggest cash outlay up front, but over the whole of your life, it's the cheapest. That's going to be the sales pitch. Here's the thing. If you buy a $2 million policy and you're paying for that, quote, $2 million now, the cost of it now, when you die in 30 or 40 years, we just talked about the inflation.
Right.
And if you think what's coming is going to be bigger inflation, that $2 million may feel like $1 million, or because these assets are indexed to inflation. So you're paying double for what you're going to get in the future. So you got to think very wisely about how you do this.
Because you will look over this point. Okay. I want to point out to you what I did at the beginning of the show. Zach.
Yes.
This is what you get when you go to the Connecticut School of Broadcasting upstairs.
It's true.
You get Hunter to go look, knowing that Danny's going to eventually go to life insurance.
Yep.
And he's going to eventually tie in monetary value and policy lapse, like the policy is worth less as time goes on.
Yes.
A few stanzas before that, you divert Hunter to go look for what's $1 million worth. And then when Danny wants to make that crescendo point, he has something to fall back on. Because I am a mother-humping conductor behind this computer. That's what I do.
I thought he was just a blind squirrel. I thought he was just a blind squirrel.
How do you orchestrate the unscripted?
I see this was all a ploy to get
How does the maestro orchestrate the timpanis, the snare drums, the violas come in, and we make music, Daniel. That's what we do here.
Amazing.
That's what I'm saying.
Like and subscribe.
Dan, does our workers comp? Dan, does our workers comp cover Tim spraining his elbow, patting himself on the back?
Do you know how hard it is, Daniel, to do what I just did there? Like, I'm playing mental. I'm talking with Zach before you come in here. I'm like, I got to play defense against Daniel. I got to figure out how to get this all in. And Zach's just like, it's going to be fine.
It'll be great.
Literally goes, it's going to be fine.
Zach knows my information is invaluable and necessary.
I'm so excited we got to do this together, guys. This has been great.
It's like when you make a baby and it's a good-looking baby. It's not one of those ugly babies you heard so much about. It's a good, like, we made a baby and oh my God, this thing is amazing. Like, that's what just birthed during this show. Is that
what you tell Tanya?
Tim was biding his time over there.
Oh, Tanya, your baby's good looking. Nobody more surprised than me.
Hunter, go get me inflation stat on it.
Oh.
You know how hard this is?
Amazing.
Like, I've got 16 different things going off in the synapses on my brain. And
only 16?
Only 16. And for you to come back to the point to bring the whole thing
I
together.
brought it full circle.
No, it felt so good.
I had you back.
Yes. It was an orgasm of words, Daniel.
That's an episode title. Perfect. I love this.
Oh, is that going to get us the clicks?
No, it'll be all right.
Okay.
You could.
I just don't want to get us banned.
Hunter dropping in from on high. It could.
Last video we ever uploaded to YouTube.
I've seen that on.
Is that what you click on, Hunter?
Well, yes.
So we call me mommy?
No.
No. We're not calling
Me
me
mommy would not click on that. Me mommy would not click on that. It's a different target audience.
She's smiling. Me mommy's smiling. Me mommy's got a side to her. What is me mommy's drink of choice if me mommy had a drink of choice, Hunter?
Remember, I told you she's only had like 1 or 2 alcoholic beverages in her life.
Oh, I didn't remember.
Well,
that.
it doesn't have to be alcoholic.
Could be a Shirley Temple.
Does she like mint tea, or does she like
a julep?
Probably.
Julep is
coffee.
alcoholic, Tim.
Yeah.
We're non-alcoholic.
What'd you got, Hunter? I'm sorry.
Well, she drinks a lot of coffee. She likes.
I knew I loved her.
Oh, coffee.
She had her first drinks with my mom and my mom's sister a couple of years ago, and she had a shot. She hated it. But she liked a pina colada.
Start out with shots.
She liked pina colada.
All right, for the fans returning who is this person?
You mean like you?
Like me.
Yes,
Or,
that's a stock
his grandmother. His
Oh.
grandmother is me mommy, and she watches the
That's
show.
a stock
I
nerd.
see.
And she's watching over Hunter to make sure he does good in this world.
Oh.
Because Hunter here, I figured it out. Hunter's siblings are rocket scientists. Like, they're wicked smart.
He's got a tough act to follow.
Yeah. Yeah, like if anybody knows Leonard's character from The Big Bang Theory.
Yeah.
His siblings are like rocket scientists and doctors, and then there's just Leonard.
Hunter, you can't let them talk about you like this on the show. Look, you got to demand some respect here, all right? Don't let them say you're Leonard from The Big Bang Theory.
Well, Leonard did end up with Penny.
Well, that's true. He did get the gal.
There you go.
Yeah.
I don't hate Leonard in the show.
No, he's
I
fine.
haven't watched it.
That is a classic
He's technically
show.
the main character.
Yeah, I like Leonard.
Yeah.
There you go.
Yeah.
On the positives. Way to go.
Anyway, none of this is there's only 5.5 months left in the year. This is a huge piece of legislation to jam through in 5.5 months. Like, think about all the carve outs, everything that's going to transpire. And I think Don, if I was a bet man, and I am, I think Don is right that it's going to be retroactive. I mean, not retroactive. It's going to be whenever the bill gets signed,
Right.
and you're going to see an exodus through the doors, and the people that are going to get hurt are going to be Don. I'll give you the final word on this because we've been vamping on this topic for a while.
The final word is that my calendar says it's June 4th, so there's actually closer to 7 months left in the year.
He was talking about the tax bill, Don.
No, 7. Yeah, 7 months. I'm sorry. Thank
That
you.
means they'll get it done because they've got 7 months. 5.5 never would have been enough.
Well, can't we just send them home?
I mean, they only work.
And
anyway,
you
right?
mentioned Joe Manchin. There's another emerging senator on the left who is ending up being more centrist, Kirsten Sinema from Arizona, who has been a thorn in the side of a lot of the just fall in line people. So it's not just Manchin. She's exerting some political strength too.
Good.
And it takes that because the last tax bill was a big deal. I don't know what time frame they got it put through. But this feels so transformative. This bill, and I hadn't thought.
Here's the thing that I think that will end up toning down the bill is because Biden ran on a promise that nobody that makes less than $400,000 will get any kind of a tax raise. My thought is that a lot of these things that are being suggested are absolutely going to hit people that are less than $400,000. So how do you tap dance around that when you're already struggling with an economic recovery?
Yeah, I'm sorry.
I was going to say the same way you forgive my $50K in student loans, you get elected and then you forget about it.
That's right.
Yeah,
that was wasn't that the parliamentarian that told them they absolutely weren't going to be able to do that?
I
think
don't
it was
know.
the Senate parliamentarian.
Didn't mean to drive it too far off the point, gentlemen.
No, you're absolutely okay.
No, it's a great point because that was definitely a big selling point.
Yeah,
actually,
it absolutely was.
And wouldn't it be something though if this tax bill can't get through? Like, once people realize what's going to be its assets, it's not. Man, they need to stuff.
It's not income. It's stuff you've worked for all your life.
Yeah,
taxes on,
and it's the stuff that your parents want to hand down to you because it has sentimental value. Once that starts to emanate throughout the populace, I think there'll be a turning point on this. Or honestly, I mean, they've got Uncle Tony. We've got some characters that we love. Uncle Tony's one of them. No better friend of the Marine Corps than Uncle Tony. Huge benefactor. Mark from Buffalo. A couple other folks out there that are longtime fans of the show in Revere. And Uncle Tony sent me screenshots of $4 and $5 gas up in Central Northern California. Like, it's here. Like, people are already being taxed, and I wonder if there's what is enough? Like, what is too much? Like, if there's a summer swoon, right? Like, let's pretend there's no tax bill, but there's a summer swoon in stocks. People are paying $4 and $5 a gallon for gas. It's already above $3.25 up in Pennsylvania, which you would not classify as a high gasoline state like a New Jersey might, or New York, or a California might. And you're paying food prices that are just. And plus with the hacker attack raising beef prices, is this all one?
I think the infrastructure bill is going to get tied together with it. That was some of the bargaining chips that were being put on the table this week. From what I heard, that lessening the tax burden would pacify the Republicans if they would step up.
They were talking about
infrastructure bill.
But they were talking about the corporate rate, not the individual. They're not talking about the estate. And look, Congress looked at where all the money is that's going to be transferred from one generation to the next. They want a big chunk of that, even though they've already given a big chunk of that. They got to pay for all this spending. I mean, that's the bottom line.
Yeah, this is
so that acquiesce you're talking about, Don, was, well, we'll just go to 28% corporate rate. We're not going to go to 34 or 32, whatever. So they decided to relax the corporate rate, but with that, we're going to have a minimum mandatory 15% bottom.
Well, Janet Yellen's in England, in London right now, trying to get everyone of the G7.
Oh yeah, they want a global world minimum tax.
That's the first, that, man, I wanted to get the markets here, but just 1 second. That's the first stanza into a Euro type situation where we're all the same. And we're not competitive with each other, and we have one currency.
They don't want to. It will show that actually, that lower taxes actually help and work, and you bring more money. That's why Ireland was screaming everybody. Right. They wanted to punish Ireland because Ireland was doing so well. Now, Trump, whether you like him or hate him, I really don't care. Yeah, he's a bombastic, arrogant guy, but his tax lowering policy was good, and it created a huge boon for the economy before COVID. And it actually brought more money into the treasury. It took unemployment very low. So they don't want pockets of, I don't want to say rebellious behavior showing that works better than what we're going to do. So they want a Western civilization kind of world, that portion tax all kind of the same, and then they're going to move over to Asia. They're going to try to do it all over.
I don't think the day. I think there is going to be as Mark from Buffalo says, you're the bear of the show. And I am. And I think that all of this has kind of come to fruition. I don't know when. And I'll demonstrate it in one last thing in one chart that I follow very closely. But this Bitcoin chart I'm looking at, Daniel, with the bear, speaking of the bear flag on it, I think has a lot to do with direction of sentiment in markets. I think it has a lot to do with even though markets are just, they can see new highs from where they're at right now. I mean, they look over the ravine and there's a new high. But I think so many people got caught up in this almost, 40-50%
frenzy,
drawdown.
Oh.
In crypto, like you got Bitcoin, and we'll just do ETH here. And I know the Dogers are okay, but these are not bullish charts. I mean, Ethereum's been almost cut in half here. These are not bullish charts. And if these were the assets that were supposed to protect people against inflation, and they maybe in the long term they're going to, but they've stopped going up right now. And people's sudden wealth has either been cut in half, or the late people to the party, as I heard the mayor of Miami, who is, by the way, holding the world's largest, like he is all digital. Bring your crypto. He wants to be New Silicon Valley, and he's pro-business, like good dude, right? But somebody asked him, "Hey, when did you get into Bitcoin? Like when did you find the religion?" He goes, "Around 39,000, as Bitcoin's trading 37." But he throws in, "I haven't bought the dip yet." So there's someone who bought Bitcoin at 65,520, just like somebody bought AMC at 72.72. How long does it take for that person? Now multiply that by millions. How long does it take for all those people to get made whole? And that's less spending power. That's less money to pay the taxes on your crypto. There's a lot out there this summer.
There's also a lot of new legislation coming out on how to tax crypto.
Right. The one world order. Like I can see Janet Yellen in some kind of federation, like Marvel suit, like one world order type thing. And
League of Nations or whatever.
Yeah, League of Nations. Well, that's World
War One, but it used to be World War One was League of Nations, and it folded before World War II, and then they had the United Nations.
The global digital currency is coming. It'll start with the G7, and then the G7 will allow other countries in if they have certain reserves and ban certain practices.
We're big anti one global currency here. It's a bad idea.
I think we're an anti-global currency show. Hey, are we an anti-global currency show? I should throw that out there.
I don't know.
Before we make these decisions, Hunter, are we an anti-global currency show? Yes or no?
It's only one
I'd
brand of human.
have to think further about it, but sounds like it could be problematic.
Really, Hunter? Don, are we an anti-global currency show? I don't want to make show decisions for the
double Double anti.
Oh, so
Double
we scooped
anti.
up Hunter in that now. Okay, because Don's
Yes,
double.
I'll take Hunter's vote while he.
You're gonna have to have a talk with that boy.
I'll be his
I'm gonna have
proxy.
me mommy call Hunter and get a switch.
It's anti-competitive is what happens. That's why England wanted to break free. They were picking up the tab for the laggard states, right?
Yeah.
The laggard nations, and they're not getting the return on the investment they're making into the laggarcy and laggarcy.
No. See, you already started. I already shook my head.
Yeah, what?
The laggarcy.
I already know that.
Yeah, and so I think we're
All right.
anti.
You thinking of leprosy?
Leprosy? No.
No, that's.
No, I'm good on leprosy.
I don't know if anybody's thinking of leprosy.
I'm 100% certain.
He's trying to turn laggard into
Into leprosy.
Something.
Yeah.
I don't know what.
like a descriptor, like an adjective.
I'll think about that.
Yeah, okay.
Look at Hunter, he's getting dumber by the minute listening to me.
Laggardacious.
Yeah.
Laggardacious.
Well, the laggardation of the economy is going to absolutely take place once Janet. I can see Janet Yellen wear like a Federation outfit from Star Trek, like with that haircut.
She's already got the hair in the shape.
Yeah, she's got the hair down. Like she's at some kind of console on the Star Trek Enterprise. Like she's at the accounting desk of the Star Trek Enterprise, next to Scotty. May you rest in peace. I think this Bitcoin chart is going to be emblematic of the summer that we're about to enter. But let's talk markets. Look, I mentioned that they are just a stone's throw. Like you can see, 42.26 is where we're at right now on S&Ps. Daniel, 42.38 is just on the other.
Just looking over the ridge.
Yeah, like you're looking over at the sunrise. You're like, the sunrise is new highs. And so, but the market has been a little bit treacherous, I believe, because you get these rolling
rotations.
Yes, you've got your rolling rotations. As you said,
rotations.
Rotation.
Rotation.
Does anybody remember
rotations?
Does anybody remember the comic BC and when that guy used to ride around on that wheel? That's when Danny said rolling rotations. I thought of the comic strip guy from BC on that wheel.
Just moving around.
Oh, yeah.
You know what I'm talking about?
Yeah.
So, Don, tell me, as I look at this, and I'm setting Don up here, hopefully for a great answer. I look at this market I look at this chart. I'm like, well, this is freaking bullish, man. You could go into the markets and buy anything, and it's going up hand over fist because S&Ps are at a new high. Don, tell me why I am wrong.
You're wrong because as long as the indexes stay above their short-term moving averages, the market doesn't want to give up, and every time they seem to test them, they're bouncing off. So you could be correct that the market is putting a top in, but until we see price is the evidence that I need to see, and until then, I'll be an optimist with a stop.
I set you up, Don. I'm sorry. I shed my bearish skin, and I became a bull in that sense. I said, tell me why I'm wrong. I think that you could go into the market and buy anything, like anything. Everything's going up. Like we can step into the markets and buy XYZ stock. And I say that the market's been a little bit difficult here. And I wanted you to tell me.
The market has been extremely difficult for growth investors.
Okay, explain that, please.
At mid, and I'm going to talk a lot about this in Wednesday's Lunch and Learn.
Oh, June 9th.
June 9th.
This Wednesday, right?
There's somebody who went to a broadcasting school. Give me a second here. Let me write this down. It's 6/9. Sign up here if you're new to our show here, webinars. Don will be live noon Eastern, but as long as you sign up for the webinar or you are subscribed to any of our newsletters, you just get the newsletter. We don't spam you. We don't say hi or anything extraneous. We don't do anything like that. 6/9, Don's Lunch and Learn. If you join Don live, you get to ask your questions live. Don answers them. That's the beauty of the live portion of it. But he'll send you the copy of it on 6/9. But Don, explain why it's been a difficult market for growth investors.
Mid-February, the dollar broke out and interest rates broke out, and that really hit growth stocks. with a 2x4 across the head. Probably a 4x4 is more appropriate. They just all sold off at once, and we've seen several sell-offs, hard sell-offs, but they only usually last about a day or two. Since the fourth quarter of 2020, when growth stocks were really on a strong trend higher, but this one was bloody and without mercy. And if you were a hodler of some growth stocks, you lost 40, 50, 60 or more percent in a lot of the new emerging growth stocks that came to the fore in late 2020 and early 2021. That money shifted into other sectors, which is why the S&P did not correct. So if you're a sector investor, a passive index investor, you weren't even aware of this. If you're like Revere and had big outsized gains in 2020, you gave quite a bit of those back in early 2021 as your stops got hit. So I'm going to go through in detail what we experienced and some lessons learned from it and some process improvements going forward.
I mean, this
But
is
really.
Okay, I'm sorry.
Go ahead.
This is almost a 4. Is it a 40? Let me just do the math here. I mean, I'm looking at a chart of Tesla right here, and from January 25th of this year, you're looking at almost 35% down in Tesla.
Yeah, Tesla topped before.
Yeah.
The most growth stocks, it was mid-February when they rolled over. PayPal's a great example. If you want to bring up PayPal. PayPal went on the first 2 weeks in February. It went on what looks like at this point an exhaustion run to the top before it just
PayPal is
rolled
down.
over.
Sorry, go ahead.
Yeah, go to that 2 week sell off there. Draw top to bottom on that.
Oh, right down. Yes,
PayPal
sir.
is.
I got you.
From the top to that bottom of that red, exactly. Yeah, PayPal is a top 10 stock in the NASDAQ 100 that dropped 27.84% in 18 days. That's a 4x4 across the head. And these are the kind of stocks that we were in, and these are the kind of some of the things that drew down. I didn't have a crystal ball knowing that PayPal was going to drop that much, so we gave up some of our profits that we had. They're still locked in a decent gain, but a lot of the holdings that we had got hit that way, and it started us trending more toward ETFs, more toward sector ETFs and broad ETFs until, frankly, the market is not in the favor for growth investors right now, with a couple of exceptions. If you got lucky with maybe the 5 or 6 stocks that really have outperformed as of late, but it's not a growth stock market. It's more of a broad index and select sector type market.
And you also moved into some commodity stocks and some Dow type stocks. And
we go where what's acting the best. Sometimes with some arm twisting, because that's not normally the pond that we fish in. We're always because we know what growth stocks can do when they do well, but when they don't do well, you got to be ready for it.
TLT is down over 11% for the year.
Year to date, Treasury bonds.
Yeah, that's the point I want to make. And TLT, I don't think there's any 20. They might have created a 20-year bond. I'm not being facetious in the last year, but TLT typically was just a blend of different bonds. There's no 20-year bond, although I think they did create
average maturity is 20 years.
And if you've got that 60-40 portfolio where it's 60% bonds, 40% stocks, because they put you in a pie chart, right? Because you got old, you got older. You remember Dr. Spock. What portion of stocks are you in? Like what are the stocks that you're in? I don't believe, Don, that the average retiree is in Nucor or Steel Dynamics.
Right.
They're in Apple because Apple's big. And when you look at what Apple, let's go 1.4. So we'll find 1.4 here, 125. Oh, I was close. Like right there is 1.4. My arrow is literally at 1.4. It's like magic, Daniel. Magic. There's magic on the screen happening, Daniel, right now. You can't see it.
Can you bring up the TNX, Tim?
Yeah, I'll do that in 1 second. Apple is down almost 6% for the year.
Yeah, all those big NASDAQ type stocks top late September, early October. and then they got another shot. And because tech is such a big percentage of the S&P 500, it doesn't take much to start coming out of them to put a lot of money into the lower weighted sector. So because energy shrunk to such a small percentage that if you take 1% out of tech and add it to energy, you're taking 1% out of a giant pie and putting it into a much smaller pie, and you can see why energy stocks shoot through the roof then.
And a lot of mutual funds have, like, they're doing ESG investing. They're not buying, digging the earth and pull out the oil stocks.
Yeah.
So
regulators are starting to push that way too. They want to try to steer you to where they want you.
That's why I think this is a tougher year than a lot of people. Like, the indices are having good years. Yeah. Don's right. If you're an indexer, this is your time to shine. Like, well, last year wasn't really, because. Right. But if you're an index, if you're
and Don, just to clarify, so a lot of those stocks that had 20, 30, 40, 50% drawdowns this year, you own some of those, but you got stopped out. So you had 10. You didn't get that. And I want to clarify, because you said something. You said, well, we gave a lot of those gains back. You gave some of those gains back. When you start from January of last year, the beginning of last year, all the way through last year, we're still above the S&P 500. And in March of last year, the portfolio was down a little over 8%, and the S&P was down over 30%. So it's a lot less drawdown. We've had this dichotomy right here in the last couple months, this divergence, which was because of growth stocks. And it's kind of what you're going to go over on your webinar, the modifications you've made.
Yeah, there's a calculation that I keep that I want to know if all the stops would get hit at everything that we have in the portfolio, how much of a drawdown would we have? And the webinar that I did on bear markets, I talked about how typically the S&P 500, if it's going to peak and break the 200, it typically peaks around 12% above the 200, and then it comes down. And that's in line historically with the drawdowns that we had experienced in the stocks that we're in. They kind of go in line. They come down faster. We get out when we break the 50-day moving average. The indexes keep going down a little bit further. But a lot of the stocks that we were in, the drawdown percentage at the top in mid-February was about 13%, which is really kind of normal. A little bit on the high side, but kind of normal. A lot of them were extended about 10% above their 21-day moving averages. Well, unless we're doing offensive selling because things are really getting out of control, we're going to hold something if it's trending above the 21-day moving average. The problem is a lot of them just drop that 10 and then maybe up to 15% right through the 21 in 2 days when that big sell-off took place. So we went from being very comfortable in a lot of things that we own to things breaking the 21 and getting stopped out all of a sudden. And it was more than a paper cut, no question about it.
So you wanted TNX, Don? I've got it up. TNX is up.
Yeah, TNX did first broke. Yeah, first it broke out on January 6th. You see where you turned red right there, right about the middle of the screen, and that didn't panic. That was a breakout from a range. You can see that yellow range to the left of that.
Yep. That
didn't really panic growth investors because you see it pulled back just about to where it broke out. And then it started trending up again. But that big breakout on 216, right around the middle, you see that gap up?
Mm-hmm.
I'm not seeing anything moving on your screen.
I'm sorry. 216 right here.
Yes, 216. Right now, yeah. That gap up coincided with the big sell-off, the beginning of the big sell-off. And you can see how rates really trended higher off of that. And that, of course, if you take a look at the QQQ, or actually, if you take a look at IWO, which is the small cap growth index, you'll see that selling off very hard from that same period.
Yep. So the market's there's so much happening under the sereneness of the S&P
or the serenity.
Serenity now of the S&Ps. I wanted Don to explain that, which I think he did a really good job with, and I appreciate that. Hunter, lay on some stocks for me. What you got, brother?
I got an interesting statistic for you here that I just pulled up. Let me pull it back up on my end. A little game.
Well, while you pull that up, I just want to say, Tim, I do want to follow up on something that you brought up last week before we wrap the show.
Oh, go ahead.
Go ahead, Hunter.
Oh, I'm sorry.
Oh, you want me to go ahead?
Yeah, go ahead, Hunter. You're good.
Yeah, go ahead, and
Okay,
I'll
so
bring it back up.
Okay, cool. Just a question for you all, and no cheating here. And this is from 4/1/2021 to now. How far down do you think GBTC is, and what do you think SIL, the silver miners, and GDX, the gold miners, have done in that exact same time frame?
GBTC is
Just
down
take a guess.
52%.
Bitcoin. That's Bitcoin.
Yeah, the Bitcoin
The
ETN. I'm going to go 52%.
Okay. Bitcoin or GBTC, which is not an exact representation, down 40% since April 1st.
Okay.
SIL up 17%, GDX up 15% in that same time period. And that's about exactly when silver and gold started to really get some momentum to their
Traction,
move
yeah.
and start to break out. So for what it's worth, if we're anticipating a bearish or an extremely volatile summer for Bitcoin, Ethereum, and other cryptocurrencies, for the last 2 months, silver and gold have had an inverse relationship with Bitcoin and have acted very well while Bitcoin has suffered. So just which leads me to the point I wanted to talk about SIL and GDX again, and I'm going to be quick here, Tim.
Sure.
Both
Thank you, Hunter.
pulled back. One,
Nothing.
of course.
Thank you, Hunter.
But so both SIL and GDX, and you don't have to pull up both of them. You can just pull up one or the other. SIL is stronger right now, but both are pretty similar for the time being. Both had a down 3-4% day yesterday. SIL held the 21, GDX did not.
Oh no!
Both
I think
above the
there he is.
21.
I thought we lost Hunter
and
for a second.
and SIL also above the 21. So
Beautiful.
GDX and SIL both had started to break out, had a rough shakeout. Maybe it's not, maybe it is, but a shakeout to the 21 and are sitting right on the 21 right now. The next name is Futu. I already mentioned that one to you, Tim. And really, like Don mentioned, there's a few areas within growth and technology that have outperformed on the way back up. Upstart is one that's, through all the moving averages. SE, Net, Snap, and then Futu is also one that it's just cleared its moving averages. And then today, I believe, pushing through the past 3 days high, roughly right around 150. Right at 150, got through 150. And there was some decent volume this morning, but just a growth name that is making a strong move. It has been up, I think, 13 out of the last 15 days. So might be also time to be cautious. Two that are more buyable or approaching a buyable spot after breaking out: American Airlines and Carnival Cruise Lines, more so AAL. I talked about these the last couple of weeks, maybe, as they look like they were possibly setting up. And so you get American Airlines, which runs up to right about the previous high. It's right around 26. And then we pulled back down 1.5%, 2% today, down 2 or 3% yesterday. So you're now sitting about 2 or 3% above the 21. Carnival's a little bit more extended, but what I'm monitoring here is, do these build a little bit of a handle / pull back to the moving averages, and then do we see volume come in and push these things to new recent highs? So for Carnival, that's a push back through that 30, 31 level. For American Airlines, it's a push through the 26 level. So something to watch in a group that was making a strong move together. American Airlines and Carnival Cruise Lines are the strongest of their respective industry groups. So American for airlines and Carnival for cruise lines as of now.
Awesome.
And last thing here, ESTC, Tim, when you pull that up, Elastic.
Yep.
One we have owned in the past. I just want to highlight the gap up on earnings. We do not have a position, but they gapped up and they weren't quite able to get over the 100-day moving average. And then today they made a higher high and they're sitting just slightly above the 100-day moving average. So a positive mover from earnings. And then another mover that reported earnings yesterday, CrowdStrike, is sitting right on the 21 and the 50. Another one that we do not have a position on, we're watching closely, but they've actually pushed through the 21 and the 100, and looks like they're going to test the 50. I'm interested to see what happens at the 200 level, which also corresponds to that 50-day moving average.
That's
The
one of
buyers
those,
come in,
I'm
that kind of
sorry.
thing.
That's one of
Go
those.
ahead, man. I'm
That's
done.
What's interesting is that CrowdStrike, like everyone's getting hacked, right? And I think these stocks would be like if you're just sitting at home going, you would want to own every one of these stocks fully leveraged to the hilt, and it's just not the way it is. It's just I always find that aspect of the market what seems so obvious.
Well, it's too obvious.
It's just not the way the market's working.
Main Street and Wall Street.
All right, stock numbers, market levels. I got one last thing, but Don has one last thing. So Don, you go ahead, and then I've got one.
Yeah, Tim,
last
we
thing.
talked a little bit. We talked a little bit last week. You were wondering whether or not the housing trade was coming to an end.
Yeah.
Bring up ITB. The middle to the late last week, we took low risk entries when we came back up through the moving averages on ITB and RH, which bounced off the 50-day moving average, and looked fine for a while. In fact, you can see that upper wick there. Restoration to Hardware tried to break out, but it failed. The last couple of days, these things have just really rolled over and gotten hit hard and back below their 50-day moving average. Note the 50-day is still trending higher, so from a long-term perspective, it's really until that rolls over that I would consider the death knell. But can you talk a little bit about why you were thinking that that trade might be over?
Yeah, let me show you the correlation. So we were talking about TNX earlier. TNX, that's interesting. I didn't know Don was going to do that. So this is interesting about TNX. Look at TNX just trading sideways. And so the lower the interest is, so you read this at home stock notes. I know everyone trades 30 or participates in 30-year mortgages. So 1.56 here is how you would read this chart. So 10-year has been going lower. It's trading sideways. And the lower the interest rate goes, the better it should be for housing. But what's happened to housing is there's no benefit with this 10-year treasury rate because of the shortages. And if you've been paying attention to the housing numbers, mortgage applications, new home applications have been dropping. People are getting scared out of the markets and applying to buy homes because of the bidding wars. Like it's now, we talked about it, it's transversed into the lexicon of everyday Americans.
Yeah.
No longer is it just nerds like us talking about inflation with lumber and brick and and cement. And so you've got bidding wars that they're making it onto the Today Show and CBS Sunday Morning. You've got inflation being talked about as common parlance. And then take all that, because that's just hearsay in my world, until you go to a chart like RH. I view RH as the upper echelon of the stocks. RH, if you don't know, Restoration Hardware.
One of the best.
Well, it's price not sensitive in this type of environment.
Yeah, okay.
Meaning they sell higher price goods, whether they're quality or not, to the shopper. Higher priced goods. It's not as price sensitive to inflation as someone would be. And I believe the market is a forward-looking vehicle, 6 to 8 months. And you can see here that Restoration Hardware has not. Restoration Hardware should be back up near new highs, not.
Yeah, it was one of the first new leaders of this last. You see where it broke out from that consolidation, and when it came down, that's a typical spot to buy. The first trip to the 50-day moving average after a leader pulls back, but it didn't hold.
They're not acting right. In short, they're not acting right. I wanted to provide a little more color.
Correct.
Yeah, they're not. And so when you see that,
changing character.
And when you see that, it's the same thing that happened to DKNG and Penn. And when you can see, not Peen. I typed Peen. Danny's so frustrated right now. He just wants to end the show.
No, I was just worried about what you were going to say. I just want to keep moving.
But when you see the break in trend and things, I mean, gambling numbers keep going up, but the handles per state are off the roof. And they're sky high in New Jersey, Pennsylvania, all the states that have legalized gambling. And these stocks aren't acting well. And it doesn't matter if you know the reason or not. It's just that price isn't corresponding to what it should be doing. Stay clear.
But the brick and mortars like Caesars, CZR, look terrific.
Yeah, and that's the dichotomy right here, where no longer is it just the online play per se. It's going to Vegas. And,
well, you're starting to open up, so now you can go back.
Mm-hmm. And Vegas, I'm telling you, I just came off of going on. I was in Pensacola for a few days with the family. Sold out. Like the hotels are sold out. Like is HIL Hilton?
People got
No,
HLT.
Like Hilton, not as great as the casinos we just looked at, but sold out. We went walking on the boardwalk, and Hooters. We're just walking down the boardwalk. Hooters had a sign on Memorial Day saying we're closing at 8. We can't find help. Like that's crazy. Like this whole, I'm telling you, man, this economy is really interesting like this. I'll tell you what, I think that was a good one last thing. I'm going to save my one last thing for next week. So Danny, real quick, take us home.
All right, folks. Listen, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. Have them sign up for our daily market insight and the webinar link. Don's doing a webinar next Wednesday at noon Eastern time. It'll be an hour long, and you can ask Q&A. Even if you can't make it because you're working, you're not trying to apply at Hooters, then you can just sign up, and they'll send you the link as soon as it's done. You can always call us old school at 855-REAL-WEALTH, and you can email any of us at dan@revereasset.com, Don at Revere Asset, Tim at Revere Asset, Hunter at Revere Asset, or Alex at Revere Asset. We can give you a complimentary portfolio review. We can look over your stuff, ask any questions, estate planning, whatever it may be. We're here to help. We'll talk to you next week on Your Money.